Guys, this view here is the city of Memphis. Fun fact, this entire city and cities across the world have been built on credit, borrowed money. This is the power of leverage combined with financial stewardship, a high financial IQ. You get to run things. Again, it's time to read.
Why they party? I'm in here grinding. Money I'm stacking. Why they rock diamonds? I can't relate to them, ain't my shit common. I set a goal for me, 2 or 3 commas. 7 figures, 8 figures to 9 figures. On a slow pace to get rich quick. Same time we just think different. Cause when you make it, it hit different.
What it do, baby? It's your partner looking old, so fresh, cold, clean. You see that thing, guys, and welcome to another edition of the Countermoves Podcast, where we look at life from a wise perspective, lean in and reason together, guys, and prescribe the right solution, man. It's been a very interesting but productive week for your partner, man. So, man, this is going to be a really good one because we're talking about a topic that is near and dear to my heart and people's heart as well, because I'm getting a lot of DMs about this topic. But if you are looking for a debate, guys, do me a quick favor, no matter what platform that you're on, Rumble, YouTube, Instagram, you name it, click that big old X at the top, man, and skedaddle out of here, guys. We're not into a debate at all. We're looking at things from a wise perspective, and we can kind of lean in and reason together. So, guys, let's get into this, guys. Guys, we're talking right now about inflation, the economy, and Main Street. The one thing that I've been seeing a lot of the times is what we've been doing is you hear a lot of verbiage going on the media talking about, man, this is going great. This is what's going on. This is going great. This whole economy is going great. Everything is going well, but stuff just wasn't adding up. And so I've actually had commentary on this topic. And I've gotten some agreement and some pushback. I always ask, hey, give me some data, give me the real world application. God, I thought it would be wise, guys, for us to bring in some sophisticated investors that are actively in the market right now as we speak. That's going to give you the real world implications of what's going on from inflation, right? As it's still high, and the effects on the economy because of inflation, and the effects of what's going on Main Street. In other words, the kitchen table. Elections are elections. Decisions are made at the kitchen table. That's what I mean by Main Street. So, guys, let's dive into this thing, guys. So, first thing we're going to talk about, let's talk about inflation. I got to bring in my partner, my cat, Patrick David. He actually came in and offered some wise counsel concerning this, because something actually happened, guys, when it came to inflation and how they began to calculate the inflation rate itself. So let's look into what's going on. Let's see what Pat got to say real fast, and then we can kind of comment from there. Here we go.
So a lot of people are concerned, confused, and wondering what the hell is going on with inflation, because they're saying inflation is going lower, but just in Q1, they announced 270,000 job cuts by U.S. employers, up 396% above last year. Same time, 5 times more. The last time we had something like this, if you take out COVID, was 2009. Yet people are starting to realize just this year, 2 or 3 months ago, they changed something in the Bureau of Labor Statistics on the way they measure inflation, and people are starting to realize why they did it.
So the first thing that I see right now as we're talking inflation, as what it says about below, is some fudging of the numbers is actually happening. Whenever you begin to cook the books, something is not smelling right. Guys, I don't know what happened to Instagram. It's kicked me off. But Instagram, sorry, guys, it kicked me off. But hey, on other platforms, no problem. We're here. But when you begin to cook the books, something ain't smelling right. Let's keep going.
To not get people to be concerned. Wait till you see some of this data in today's episode. I want to give a quick shout out to our sponsor, Fund and Grow. The reason why.
So let's dive in this real fast.
Talking to a guy who.
Let's go ahead.
You. This is somebody for them. As a special credit, click the Fund and Grow value from the video. Give it a thumbs up and subscribe to the channel. So they're telling us inflation today is 6.5%, give or take. Yeah, inflation is fine at 6.5%. It's not really as bad as you think it is. And a lot of people are confused, saying, how is that even possible? Because chicken's up 10.5%.
Wow.
Butter is up 26%. Milk is up 50%. Egg 170% in certain markets. Coffee 13%. Baby food 10%. Rice and pasta 15%. Bread 15%. How is it possible if all of these things are up the way they are for you to say inflation is only up 6.5%? Yet if you go to the official versus the shadow stats of how we used to measure inflation, you will notice if you look at the blue versus the red, the red shows that inflation is only 6.5%. But blue, the top, shows we're somewhere between 13 to 14% inflation. But this isn't the only thing that
13 to 14% inflation. That is the true number that he's talking about, right?
you have to see what happened. Just this year, if you go on the BLS website, U.S. Bureau of Labor Statistics, they announced something very quietly. I don't know if you heard about it or not. Matter of fact, I'd love to know if you heard about it. If you did, comment below. It said, beginning with the January 2023 index, scheduled for publication on February 14, 2023, BLS plans to update the spending weights in the calculation of the CPI every year instead of every 2 years. So you may say, I don't get it. What's the big deal with that? Let me explain to you what the big deal of this and just kind of see the optics. If you look at the historical rates, we're just going to go back 5 years.
So getting right there, guys. Come back to me real quickly here, guys. All right. Getting back to this real fast. So now what we're seeing right now is you actually are seeing it, the Bureau of Labor and Statistics, what they're doing is that they're now changing calculations now. They're changing things now. So you're not operating by true numbers. You are now kind of cooking the books a little bit. So the normal calculations is every 2 years. They change it to every year. Okay. So now let's see why that they actually doing this. Let's go back to Pat and see why this was actually done. Let's go.
Do you see that? How it goes January, February, March, all the way down to December and the years. So the old way of measuring inflation, let's just look at February of 2023. It says it's 6%, right? So if we do the old way of how much inflation is higher, you would measure it from 6% to February of 2021. And they would have to say inflation is up 4.3% than what it was 2 years ago.
So what he's saying is right there is if you go by the normal calculations right now is what he's saying is inflation's up 4.3%. That's what he's actually saying with the proper calculation, which is every 2 years. Now let's see what actually happens when the Bureau of Labor Statistics changed the calculation. Let's see.
Years ago versus the new way of measuring it. They have to go from February, which is 6%, to last year, which was 7.9%, and they get to say the magical words. Look at our policies. Inflation is down 1.9%. And you and I sit there on TV and we hear a president say this, and you say, I don't understand how. How can you say something like this? Well, it is because of our phenomenal policies. Inflation is down. And we have to say, all right, I'm just not feeling it. Maybe it's me.
So hold on one second. So now it's not that you're not feeling it. Now we're feeling it. We're feeling what's going on with the inflation. It is. So now what's happening is because they actually changed the calculations of how they determine the inflation. What we now see is this here is we now see that they can now say that inflation is down because they went from 2 years to 1 year. And now they get to go on TV and brag about something that is not the truth of inflation is going down. That's BS. It's a lie. It ain't going down. It's actually going up. It's simple. We saw the raw numbers of before this time frame. So whenever you begin to change numbers and calculations, I got to look at you kind of sideways and say, are you trying to play me? The answer is yes. We're getting played. All right. So that's inflation, guys. That's inflation. All right. I want you guys to look at how inflation was normally done and how they fudge the numbers and begin changing the calculation so they can go on TV and brag. All right. So now,
what's good, y'all? LaDale Buggs here. Most individuals that I talk to today, they're really concerned about the economy.
specifically the volatility of it. Now, the area of their concerns really centers around the variable of inflation. Inflation right now is really outpacing people's wages, number one. And number two, it's beginning to affect their 401k and IRAs because their retirement accounts are connected or intertwined with the stock market. Over the years, I've been fairly successful in real estate investing. Currently, I own about $35 million worth of real estate under management. And also my partner and I have been able to build our private equity and venture capital firm to about $1.2 billion worth of assets under management. Now, this success has taken place in up or down economies. Now, whenever there's volatility in the market, opportunities begin to show up. There are 3 investment strategies that, if implemented the correct way, any investor can go from 0 to 6 figures in the next 6 to 12 months. Click on the link below or swipe up and let's talk through these strategies. So now we've talked about inflation. Now, guys, let's look at how this inflation now is affecting the economy. What's going on with the economy? We got to bring another sophisticated investor now, Kevin O'Leary. Notice Patrick Bet-David is a real life investor, sophisticated like your partner. And what's happening is he's in the trenches. He's actually active in the market. This is not theory. This is actual facts, data. All right, facts. So let's bring in another fact-based person that goes off of data. Kevin O'Leary he's on Shark Tank. Everybody knows who he is. They call him Mr. Wonderful. All right. To me, he's one of the most wisest investors. I think, be honest with you, on the planet. I mean, how he runs numbers, but he's data driven, fact driven, not narrative driven. Let's keep going. Let's see what's going on.
Market's up big. Dow's up, I don't know, over 400 points. Not sure I know why, but I always want the non-rich to get rich, all those middle-income folks with their retirement accounts. Okay. Anyway, we've got Kevin O'Leary.
So I want you to take a look at this. You see green. You see Dow is up 35,000. You know what I'm talking about? S&P is up 45,000. You know what I'm talking about? NASDAQ, you know what I'm talking about? Is up 13,000 now. I mean, plus 61% on the NASDAQ, plus 90% on the S&P, plus 1.16%. On the Dow Jones. Looks good. Now let's bring in data and facts. Let's go.
Chairman of O'Leary Ventures, Shark Tank investor, and author of Cold Hard Truth on Business, Money, and Life. Kevin O'Leary, we have a lot to talk about. It's good to see you. Let's start. The front page of the Wall Street Journal ran an article saying how interest rates are high and they're going to stay high, but the stock market shrugged it off and it's up 400 points. What do you make of that, Mr. Wonderful?
Listen.
Balancing concerns about the Finch downgrade and higher and pesky inflation, both in energy and food, is...
So up front, you see Kevin point toward a high inflation. Up front, data. Up front, here we go.
A big issue around how much money we're going to print. We've got 2 big acts, as you know, the Inflation Reduction Act, the IRA, and the CHIPS Act. That money's not been deployed yet, Larry. That's close to $1 trillion.
So hold on. So the Inflation Reduction Act and the CHIPS Act, he's talking about $1 trillion that has been printed out, has not been deployed yet. It's just sitting, chilling. Let me say it again. $1 trillion has not been deployed yet, right? It's just chilling in the cut, rotisserie in the corner like some chicken. Interesting. Let's keep going. Data, facts.
That's money we're going to be printing. And where's it going? All into the S&P 500. So if you're an S&P 500 company, yippee-yi-yo-ki-yay. Yeah. You've got clear sailing for the next 3 to 4 years, and the market knows that. And these are big sectors in tech and all kinds of initiatives around construction. And, you know, whether you think printing money helps or hurts inflation, I personally think it increases inflation.
It does.
That's why it's staying up there. But this is an unprecedented time in our economy. You've never had so much, you know, let's call it dry powder.
Yeah.
You want to own the S&P while this much dry powder is waiting. And it's not going overseas, Larry. It's coming into America big time. And it's already been approved, already been passed.
Yes.
Coming to a theater near you.
So Kevin is talking about how money has been printed, sitting in the cut, chilling, and that money has nowhere else to go but to the market. Okay, so it's not going across the seas; it's going to the market. That's why you see the S&P, the Nasdaq, the Dow Jones is up because of the fact that the money is going right into the market. That's called fake success. That's called fake success because it is Congress trying to manufacture cash flow. Come to your partner real fast, man. Let me give you a little lesson real fast. Is whenever Congress begins to try to print money, instead of letting the natural flow of currency, of cash flow to actually happen, inflation is the byproduct of that. So he talked about two acts, the Inflation Reduction Act and the CHIP Act, how $1 trillion has not left the bank yet. It's still sitting in the cut chilling. It's just marinating. That's all it's doing. Why? Because the government was trying to manufacture cash flow. Where's the money flowing? It's going to flow right back into the market. So now you people are saying, look at the Dow Jones. My retirement may be looking good. It's really not. Look at the Nasdaq. That's called fake success. Fake, right? It's fake success, and that printing is devaluating your dollar. So your dollar is worth less because of all this printing. Right? Let's keep going. That's what he was talking about, Kevin O'Leary. Let's go. Attention real estate investors. Whether you are a seasoned or novice investor, we all know that with uncertain times or volatile times, that creates opportunities. Now, with these new opportunities, only the implementation of the correct strategies will separate that average investor from that great investor. There are 3 strategies that, if implemented the right way with the correct team around you, any investor can go from 0 to 6 figures, maybe even 7 figures in the next 12 to 24 to 36 months. Click on the link below or swipe up and let's talk through these strategies. Back to the sophisticated investor that's driven by data, facts. Here we go.
That's a great point. Look, that's a seldom heard point, but I think that's very important. The government spending stuff that was passed hasn't played out yet. Wow. It's going to play out unless it's rolled back, which it probably won't be. Wow. You're exactly right. So there's a lot of money sloshing around.
Sure is.
And it's going to find its way into the stock market. Wow. That's what you're saying.
Yep.
Look, the Kudlow Trust likes to hear this, and I'm going to bet you a lot of people with all their IRAs and 401ks like it too. But Kevin, you don't think interest rates are going to interfere with that? Is that the idea?
Listen.
No. That's 40% of the equation. The S&P 500 employs 40% of America. Where the cracks are starting to show is in mainstream America, where the car loans have gone from 5.5% to 9%.
So now, guys, he's going to talk about how it is affecting Main Street. Let's go back. I want you to hear what he says. Let's go back and see what he's talking about. I want you to see what he actually says. Here we go. Let's go back. Here we go.
The S&P 500 employs 40% of America. Where the cracks are starting to show is in mainstream America, where the car loans have gone from 5.5% to 9.5%, continue to go up. Lending has slowed down. We haven't talked about regional banks, Larry, in 6 weeks. But don't worry, you're going to be talking about them soon because there's some cracks starting to show there. And I don't think
so. He's talking about car loans now are from 5.5% to 9.5%. That's a big jump in rate. He's also talking about you begin to see cracks also in the regional banks because lending has slowed down. Okay, those regional banks depend significantly on lending out money. If lending is slowing down, banks make money when they lend out money. If lending is slowed down, banks are making no money. All right, they got to put money to work. All right, let's keep going, man.
I don't think the Fed is finished, unfortunately.
No, they're not.
You know, we've got some issues here. We're still at full employment. We're still under 4% unemployment. We've still got this nasty energy inflation and food inflation, and they just won't go away. And these actually hurt mandates. If you're in the incumbent in the White House and you got high gas prices coming back up to $4,
commodities
and protein, whether it's chicken or beef or pork,
produce,
is going back up again, that's not so great as you're going into an election cycle. So that's where the war is going to be fought.
So now he's talking about he went from car loans to banking. Now he went to commodities and products and services now. And excuse me, things are going up, going back up, guys. Okay, you can only lie for so long. You can only lie for so long, guys. It's just ain't hard. Whenever you try to manufacture cash flow by printing money and the money has nowhere to go, it's called inflation. It's like a balloon. It just swells up as soon as it's going to pop. Let's keep going.
But frankly, if you're a regional bank right now, you're not lending. And I've been calling this out. I've been talking to you about this now for 6 weeks.
Yeah.
I deal with this every day with small business. It's
real live data, not theory, data. Keep going, Kevin.
It's not good for small business. It's great for the S&P 500.
For sure.
But if you're running a $500 million or $50 million or $100 million business in America, employing Americans sitting in Des Moines, Iowa, you're not so happy right now because your costs have gone way up.
Yes.
You know, let's come back
to now he's talking about producer price index, PPI. Let me give you a little lesson there, guys. PPI, come back to your partner, man. PPI, producer price index. You have consumer price index, CPI, and PPI, which is producer price index. He's talking about the cost to the producer of the goods, the producer of the services, right? The banks, the producer of the loans, right? The producer of the car loans as well. Producer price index is up. It's costing more money. Notice he said $500 million. We're talking about small to mid-tier companies are beginning to feel the pain, guys. You can only lie for so long. Let's keep going, guys. Let's keep going.
Back to this Fitch downgrade thing. A lot of people don't understand it. They mentioned their worries about governance. I mean, look, I'm not worried about defaulting on our debt. That's not worried about that. But their internal message was, in the next few years, government spending is going to be very high, like 25% of GDP.
That's
the average
crazy.
Historically is 20. Deficits are going to run 6% of GDP. That is a massive number for peacetime without any kind of depression. Now, that's kind of what you're saying, that they've overloaded the system with all this liquidity and all this spending. But the Fitch warning is a warning. You can't keep doing this forever, can you?
No, you can't. And there's no way to sugarcoat it. I've said it a million times in the last week. This is not good news. There's no good news here. You can't look at it from a good news perspective because here's the fact. If you're a sovereign wealth fund, the majority of the sovereign wealth funds, trillions of dollars invested, the majority of wealth in the world.
Okay. Oh, man, this is a good lesson by Kevin. My man killing this thing. Come back to your partner. Okay, real quick, guys. All right, real quick. This is so good. Now he's finna go into the wealth funds. Okay, to those hedge funds, okay, those type of funds, those institutions. Listen to what they are invested in. Listen very close to what they're invested in. Here we go. Listen very closely. All right, guys, you're beginning to see how this is hitting even the Fortune 500 to 1,000 companies. Listen.
Is sovereign wealth. The majority of their liquidity is held in U.S. treasuries.
Wow.
That's what they buy because they consider it the safest haven. This just took away from that a little bit. It made them a little more concerned. Do they consider the Swiss franc as an alternative? Would they go somewhere else? Maybe not yet, but you go from AAA to AA. What's next? Single A?
Wow.
All of a sudden, it's not just us. And I understand Warren Buffett doesn't care, Jamie Dimon doesn't care, but they're talking their books, Larry.
Yes,
Warren Buffett is the largest domestic holder.
So he's talking their book. So he's talking about it's theory. So these companies are invested in government bonds and treasuries, right? That's what they're buying, these wealth funds, okay? These institutional funds in that manner. So here's my question is this here. Here's my point that I want you to point out. Notice he said that they're getting concerned and they're looking to potentially pivot to another currency, potentially. And he pointed back to Warren Buffett and other colleagues as well, talking about their books. Listen to what they're invested in. Listen to what they're talking about. Let's listen. Let's go into it. Let's listen to it.
Holder of treasury bills in America. He's never going to say anything bad about America.
So Warren Buffett owns treasury bills himself. So why would he talk bad about treasury bills that owns himself? I told y'all, man. Hey, save this live. This is one of the best ones I've ever done. Here we go.
Or should he? And I'm a huge fan. To me, those guys are cash flow guys.
Yes.
Charlie Munger's my mentor. I love that guy.
Yes.
But you can't tell me they're not talking their book.
Yeah.
And so is Jamie Dimon. He should. He's the number one bank in America.
Yeah.
But they can't be feeling great about a downgrade. There's
No.
nothing good about it. So we got to start thinking about it. It's a wake-up call.
So now he's talking about the downgrade, the credit downgrade for the U.S. went from AAA to AAA plus, and how that wounds government treasuries, which then wounds banks, Warren Buffett, and the elite there, because they're buying the safest investment, in their opinion, is treasuries. Why? Because they invested in it. So now you're beginning to see how even the elite are beginning to feel a little bit more. Because why? Their security blanket, the treasuries, is losing value because of the downgrade. Right? Here we go. Let's keep going, guys.
Call. And I'm not against government spending, but we've got to spend it wisely.
Yes.
Do we create jobs? Do we increase growth?
Yes.
Do we get more tax revenues from more economic activity?
Yes.
If it's not doing that, why are we spending it?
Yes.
That's the question.
Yes.
Yeah, Kevin,
Yes.
I am against government spending.
Yes.
I mean, I don't think it's going to get us anywhere. Look, that money is parceled out by Washington,
Yes.
to favorite
Yes.
climate change corporations and
Yes.
woke corporations
Yes.
and Democratic interest groups and the blue states and the blue city mayors and the labor unions. Come on, the good, what little good is achieved from government spending, we're way beyond that. We're interplanetary. We're solar system. We're Milky Way beyond that stuff now.
Yeah. Listen.
Larry, I'm like you. Just cut taxes.
Yeah.
That's not reality.
Yeah.
Woo! So he talking about cutting taxes. Now, why would he say that? Let him finish, and we're gonna talk about this. Now he's talking about policy stuff. So let's keep going.
Yes.
So I would rather just cut taxes.
Yes.
Because I think that money going through the private sector would
Yes.
be better. But the truth
Wow.
is governments do spend. And the only question every American taxpayer should ask is, what's in it for me? You spend $1 on some program, how do I get that back? Because it's on my back. I have to pay it back
This is
one
so
day.
good.
Or not, it's not me, my kids. And I think now Finch is saying, ladies and gentlemen, you've gone crazy. That's basically what they're saying.
Okay.
All right, guys, man, my man Kevin O'Leary, Doc, man. At the end, guys, he was talking about how can you when he talked about lowering taxes, guys, just cut taxes. What he was saying, he actually said it at the end. He said, allow for that excess cash to flow through the private sector, right? Not so much the government sector, all right? To the private sector. Cut taxes so that cash flow can begin to originate organically, not try to manufacture with more printing, right? Allow for the money, excess cash to flow through the private sector. The only way that happens is if you do something that's going to attract capital, where you attract capital by cutting taxes as well as cutting regulation, guys. Man, that was so good, man. That's my dude, man. That was a phenomenal lesson. Here's my reaction, guys. Very simple. Number one, they're lying about inflation. Let's keep it a band. Whenever you begin to change calculations, right, from 2 years to 1 year, so you can brag, trash, lie, let's move forward. Inflation is high still. Number two, then you look at the effects on the economy, right? You have how car loans went from 5.5% to 9.5%. Big old rake up. You saw in Patrick David's video that you have milk, eggs, all these goods are up, chicken up, significantly up, right? Look at the fruit. You will know what's going on by the fruit, right? When the scripture says you know them by the truth, right? By their fruit. Look at the economy by its fruit. What is it yielding, guys? It's extremely simple there, guys. Then you had Kevin come in and talk about also when it came to car loans. You talked about also how to the banks. You have regional banks as well. You're going to begin hearing some rumblings behind that, because whenever there's a lack of lending, that affects initially the small to regional banks. Why? They make the lion's share of their money lending money out, guys. Right? So if banks are not lending money, they're not getting a return on investment. So they have this cash just sitting there doing nothing. Money is not working. Okay, there's no cash flow. It's real simple here, guys. All right. Then he talks about, well, how can he kind of solve the problem? He said, don't stop printing, but government, we're not. And then they can't stop printing at all. And I believe that they won't stop printing because it's part of the plan. But number two, because they actually want to deflate or inflate the debt away to go to a digital currency. That's another lie. All right, guys. Then number two, he also talked about cutting taxes, and I would also say regulations, because you want to do actions that attract capital from a consumer standpoint and from an investor standpoint when it comes to a producer standpoint. You want the producer and the consumer to work in concert together, right? So that they can cash flow can organically begin to flow. It's not hard, guys, but unfortunately, Congress as well as the executive branch will not stop printing. Realistically, they can't. Be honest with you guys. So that's my reaction to it, guys. Man, what's the counter move, guys? Real simple, guys. I always say, guys, peep it, sweep it, then keep it, guys. I gotta say, guys, with what's going on, you've heard a lot of information. All right, a lot of real world, data driven, from sophisticated investors that are active in the market information, not theory, in real life applicational information, right? So now that you have this new information, examine your current situation. Where you at? Are you feeling the pain? What's going on? Holler at your partner. What's going on? What's your current situation? If you're sitting pretty, you're good. If not, you got to make some decisions now. All right? And if you do not feel comfortable where you're at, again, you got to make some decisions now. All right? So peep it. All right? Now, sweep it. Now, you may have a strategy already in place. I got to ask this question. How secure is your strategy? How secure is it? Is it working for you? If it ain't, it's probably wise for you to do something different, right? Insanity is doing something, the same thing over and over again and expecting a different outcome. So either you're insane or you're trying to make a wise decision. Which one do you want to do? Only person answering the question is you, all right? Number three, I always say this here. Think generationally. When it comes to your solution, guys, all right? Think 3 generations ahead of you. After you, after you. Think 3 generations after you. You want your vision to be bigger than just you, because when you pass away, then the vision's dead. But if you're thinking 3 generations ahead of you, you pass your vision on to 3 generations, right? Make your vision bigger than you. All right? Think generationally, guys. Now, I would say if you are in a situation to where you need to make a counter move, guys, starting a side hustle, a business is essential to defeating inflation, right? It is pivotal because they're going to continue to print. So that means things are going to continue to get more expensive. But if prices are doing this and your income is doing this, you got a problem. So now what are you going to do? You got to begin a side hustle to be able to make more money so that your income is not doing this, it's doing this. And it begins to outpace inflation, if that makes some sense, guys. If that makes sense. So you have to really begin a side hustle. So what shows out? What do you want to do? You know what I'm saying? What do you want to do? Very simple, guys. I've asked this question. People ask that question all the time. What should I do? Well, what keeps you up at night? What problem you want to solve? Your vision should not be just to make money. All right? That should not be your vision. Making money is a byproduct of your vision. Right? What problem are you trying to solve? That's how you find the right business for you. It's what problem do you want to solve? Right? Who can you partner with to solve the problem? Simple. Very simple to find out what your purpose is. What problem you want to solve, guys. All right? I always say this here. That strategy should have 3 things. You should ensure, leverage, and protect. It's called the velocity of money. Ensure, leverage, and protect. Those 3 things. Very simple, guys.
I'm Graham Majors. I'm the CEO of American Rounds. We are in Pell City, Alabama at Fresh Value grocery store installing the first ever automated retail machine for ammunition. The stores were really the inspiration for it. I mean, they knew their customer base and they came to us and thought this would be a really good opportunity for their customer base. There's a lot of hunting community here in Pell City and thought that their customers would love an opportunity to be able to buy ammunition here at the store.
We're super excited to offer, what we think is the first ammo kiosk. We're always looking for ways to give our customer another reason to come visit our stores. Anything that we can do to help them make their shopping trips easier based on the feedback that we've gotten just from customers today. They are so excited about us having the ammo kiosk.
We're getting ammo!
One of the ways we're changing the landscape of ammunition sales is to make it more available. Being able to move into a place like a grocery store, supermarket makes it a lot more available to the public. But we're taking a different approach to it. Traditionally, ammunition is sold at outdoor type stores, your sporting goods stores, and it just sits on a shelf. It's very accessible. Because of that, there's a high rate of theft. But with our machines, as you can see here, we have a very secure automated retail machine. We're able to age verify. We scan a driver's license. It then takes 360 facial recognition for the purchase and matches it to the ID. So the machines really provide an opportunity for safe, affordable, and available ammunition sales.
There is no doubt that foot traffic will increase based on the feedback that we've gotten. And again, we're super excited not only to have it here, but in other locations in Fresh Value as well.
We're really excited about where we're going. We are going to continue to expand here in Alabama. We have a machine slated to go into Oklahoma, Louisiana, Texas. So over the next year, we're looking forward to, seeing these roll out all throughout the South and the Southeast.
Now, I always get asked this question all the time, LaDale, man, can you help me out? Can you help me out, man? Not a problem with it at all. I will. Here's what I'm going to do, guys, is here. If you are willing to talk with me or someone on my staff, it's very simple, guys. There is a QR code right here. All right? I'll make it bigger here. There's a QR code right here, guys. Right? Click, scan on it. Schedule time to talk with someone on my team, with someone on my staff, guys. Very simple, guys. We'll help you find your vision. Ask you the proper questions. All right? Because you may not know where to go. No problem. Seek wise counsel. If that's us, we'll be honored to help you out. If not, it's all good, baby. We ain't sweating it at all. We just want to make sure that you get what you actually need. So if you want to talk to somebody that could actually help you determine what side hustle business that you would like to do or what your vision should be, holler at your partner. Scan the QR code. Schedule time with our staff. We help you out as much as we can, guys. Well, man, this was a good one, guys. Man, if you could, guys. So, guys, give me your thoughts. Let me know what you think about it, guys. Man, was I making any sense at all? Was it all over the place? I believe I killed it today. Just put my collar a little bit. I believe I killed it today. Now I'm tripping. But at the exact same time, guys, let me know. Give me your thoughts. Does it make sense at all? Are you cool with how things are? Or you need to change? The only person answering that question is you. Now, guys, every single Friday and also Tuesday, guys, we have a show on the TITM Media Group network that actually called Somewhere in the Middle, done by Suni and Mo, guys. As I do every time we do with the Countermoves Podcast, here is a little snippet of what you can expect. Here we go.
Now we're about to get
Going down.
Facts on facts on facts. Hello.
All right, guys, that's Somewhere in the Middle with Suni and Mo. Guys, every single Tuesday and Friday, you'll see them at 9 p.m., guys, 8 p.m. Central Time, guys, which is pretty cool. But, guys, man, that's all I have for my time, guys. Man, you know I end it every single time, guys, I would say. And before I go, for those that may not got it before, again, schedule time for wealth management strategy when it comes to choosing your business model or choosing your vision. Scan on the code, it's all good. But guys, you know I end it every single time when it comes to this. I always say this here. Before you leave, and while you can, you see that thing, baby, take that damn picture. and to give it to your mom and them. That say it with your chest and with your partner, and holla at your partner. God bless you. See you next Thursday. Peace.